welcome. You're watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani, and we're going to talk about two very interesting topics today. The first one is an interesting one because for many Indian families, the biggest uncertainty around foreign education today isn't admissions or rankings. It's the rupee. We've seen how rupee has been depreciating, and as a currency swings, reshapes costs, studying abroad is no longer just a career decision, but actually a financial one tied closely to exchange rates. So how much of the rising bill is really about the rupee, and how should parents plan when currency stability itself feels uncertain is the kind of topic that we're going to address today. And to talk exactly about this, we're joined by Kartik Jhaveri, who's the Director Investments at Transcend Capital, joining us now. Kartik, hi. Thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is that how much of the rising cost of the foreign education is now really about the kind of rupee depreciating?
Firstly, thanks, Mahima. Thanks for having me there. Um, in my last 25 years of interacting with so many parents, and we've been sending children abroad, and we've been planning education, etc. It's a very important consideration. But the fact is that rupee has been on a decline and kind of a depreciation all the way since the time we got our independence, when 1 rupee was equal to $1. So since then to now, about more than 75 years, we are at a situation where we see ourselves, with 90 rupees and buying the same dollar. So somewhere I think this is ingrained in everyone's senses that rupee is going to continue depreciating. We have to budget not only for that, but budget a little extra over and above the cost. And depending on the duration of the course, if it's a slightly longer course, I mean, if it's not the 1 year courses, then and anything longer than that, 2, 3, 4 years, we automatically take a little bump up in what we would expect to spend. So parents do that. And there's a very important consideration that everybody puts to the depreciating rupee, because we don't see our rupee appreciating really in that sense, do we? So, so I think it's a part of our life. We have to live with that.
Yeah. So 2026, what is the trend that you anticipate? Because you did mention that this is here to stay, right? So
Yeah.
just want to understand long-term trend. What is it that you're seeing? Do you think that the rate at which it's been depreciating will reduce versus how it's been in the past 1 year, or what is the trend looking like?
So we did a study, since 1947 onwards till now, and we found that on an average, it's about 4 to 4.5%. I mean, that's been the rate of depreciation of the rupee. Now, in some years, the depreciation is a little faster, means we've even gone down to 10% plus in a year, single year. But there were years in which we did not go down much. We were reasonably stable. So we were at about maybe -1% or just about stable there. So in that sense, it's an average of about 4.5%. The rupee has recently depreciated in front of us. So I think 2026 should be stable. And the reason I say that is because the corporate earnings, government earnings, everything is absolutely intact. And even the current depreciation is not due to anything wrong with India. It was more to do with geopolitical reasons and tariffs and all those kind of things playing in our background. But Indian economy per se is strong, is resilient, is moving forward, and there are no negative surprises in terms of GDP growth or tax collections or GST collections or any of that. So I would think that we will have a stable 2026.
Okay, so Kartik, if somebody as a parent is planning to send their kid to the US or maybe any part of this world, I'll say US specifically because we've been depreciating against the dollar.
Yes.
How should one go about it? What should be the checklist? One thing, and like you mentioned, right? If it's a 1 year course, might not be that big of a concern. But if it's a good 5 year course, how should one go about planning it?
So, in our experience, we've seen that people don't actually plan, because the maximum, I mean, in terms of foreign exchange and, management of forex rates, we of course plan, we of course help people to save up money, to accumulate money over many years, because even the original, say 10, 15 years ago, the original time when we started investing, we would automatically budget for about an 8% inflation, slightly higher than the Indian inflation. So if that is one thing that you keep in mind, because remember, the inflation being 6 or 8% is purely because 4% is rupee depreciation. And then the foreign inflation may not be as high as India. So the foreign inflation could be 2%, 3% if you look at countries other than America. But these days, American inflation itself is high. So if you kind of make your projections for new parents or parents who are planning to send the children 10 years hence, etc., maybe you want to work with an 8% inflation rate on an annual basis for your funds. So if you plan on an incremental 8%, then you will know that if you were to spend 1 crore today for your kid for 1 year, how much would you actually land up spending maybe 10 years or 15 years ahead, in that sense. So I would think 6% being aggressive, 8% being actually conservative. If you work on an 8% number, it's nice because then you will not get any rude shocks or surprises.
Interesting. And a lot of people, go through the debt route, right? So just want to get a sense there as well as to how should that planning be done. Let's say if a person has the capability to pay off, let's say 40% of the fees or 50% of the fees, and remaining the person is taking a debt. How should that planning be like, considering the rupee depreciation also into consideration?
So, Mahima, unfortunately, we can't do much to control the rupee depreciation. We cannot book forward contracts and education loans, etc., so that we can hedge or protect ourselves from from adverse interest rate movements. Forex movements against us. But what we can do is use bank finance. Because what happens with bank finance, I mean, of course, you pay it to the extent that you want to, and if you're comfortable with the idea of doing bank finance, then I think it's a great idea because you can get education loans as much as up to even 100,000 US dollars or more, depending on the tuition fees, and then you're going to send that to the child over a period of time. The interest rate, the interest rate in India, the growth rate in India will more or less take care because your investments would we assume that they will earn much more than the incremental forex rate. So on the foreign exchange side, you will have to pay 4% more. But if your investment in India is generating, say, 12 to 15% in equity, then net, you are still moving up by about 8%, so which is not bad. If you're in a very conservative fixed deposit kind of a scenario also, say about 5% or so returns post taxes, and you will still have a slightly incremental positive cash flow. But I would think an equity investment for your personal funds, bank finance on the other side, bank finance where you cannot control the foreign exchange rate, but your investment growth rate being much higher than the depreciating rate of the rupee. So if you think in that sort of sense, then you'll be very happy with your planning. And definitely, I would say go with the loans because then it gives the child also a sense of responsibility. Plus, you can break it down into EMIs if your assets don't permit at the moment to pay lump sum. So try and use bank finance. I think it's a great idea. And limits are good. You get good limits.
Interesting. And so you did mention that taking loans, of course, is is good in terms of where responsibility stands in terms of for the kid, of course. But considering financial decisions into picture, do you think paying off the fees earlier would make sense, considering that the trend is here to stay because of dollar depreciating?
So, Mahima, that has two angles to it. One, I may be prepared to pay fees in advance. Now, is the university on this other side prepared to receive the monies in advance? So that's a very big consideration. Mostly, that facility is not available. So that option is not really feasible and possible for us to do. If you, for example, but have a bank account or if you have a trust, which a lot of very wealthy families do, who have number of students from their house, from their family, extended family, go, maybe they fund these kind of structures where they already transfer the money, but then the money sitting there is of no use. It has to be again invested to put at some use. Then you are insulated against the foreign exchange movement. But then if the money is just sitting in the bank offshore, even that's of no great help. So, I mean, that's a much different and a complex sort of an argument to have. But in the very simplistic sense, should you pay in advance? A, you should have the money to pay it in advance. And B, if you have the money, does the university on the other side happily accept advance payments from you? Normally, they don't. They want the fees to come as per the schedule. So, even our Indian schools don't have a prepayment option. So, I would think, I wouldn't be surprised. But then there might be university. There might be some who accept. But mostly, I don't see this facility available.
Okay. One last question to you, Kartik. Do you think that the overall picture before making this decision whether to send your child abroad or not right now has become more a financial decision than a career decision?
Oh, absolutely not, Mahima. Absolutely not. Because the ones who want to send their children abroad and the children who want to go abroad for education, it's a matter of personal and family choices. Personal choice for the student, family choice for the family together that our child must study abroad. So they only make this choice because they know they have the funding or they can arrange the funding over the next 3 to 5 years. So there is no consideration. I mean, financial consideration, even 20 years ago, was not a criteria. Even today, it's not a criteria. You broadly know if you want to do it, this is what the cost is going to be. The cost assumptions are very easily available. Foreign universities very clearly display the cost structures. You can, you can plan for it now, or you can plan for it 10 years later, depending on where the child is. But uh, and fortunately, I would say there is parents don't give any consideration to the foreign exchange movement. Yeah, I think they are valuing the education there and the inputs that the child is going to get much more over the little extra financial burden that they are going to have. In any case, we all budget for about 10 to 15% extra, so over and above the whole cost. So I think no parent worries about this. Financial criteria is not the criteria. I mean, the choice is to study abroad. So.
All right, makes sense. Makes complete sense. Kartik, thank you so much for giving us those insights, and I'm sure our viewers will find this very helpful. So thank you so much for taking out the time and giving us all those insights.
Thank you for having me. Pleasure.